Hi guys, Joshua Tharby here, the property tax specialist, and today I'm talking to you about property valuation and some of the complexities that are involved. The biggest complexity in the realm of property valuation is all about development value, hope value, and today we're going to be focusing on it from an inheritance tax point of view. So broadly, when it comes to agreeing a valuation of an asset with HMRC for inheritance tax purposes, when it comes to land, usually your estate, your executors will have a valuation prepared, then HMRC usually have other ideas because they want to basically make sure that that value of that asset for tax purposes is high as possibly can be, so that they're going to get a bigger slice of it when it comes to their inheritance tax take. Whereas us, the accountants that want to try and save you tax, we're going to try and make sure it's got the lowest value possible. Now, the biggest area of disagreement for this is all about development value. HMRC try to say that basically where there's any potential for it to be developed, this needs to be taken into the price, the market value for inheritance tax purposes. So as you all know, where there's development value, the value of that land, the value of that property is going to be higher than just the normal grazing value as agricultural land. So there's a case that happened in 2019, Foster's v Revenue and Customs, which basically involved a deceased person's estate and 6.39 acres of land. It was agricultural land, pasture site, and a dispute arose between HMRC and the taxpayer about the valuation of this site. So the executors and the professional advisors were saying that this site was worth £191,700. HMRC and the VOA, they came up with a value of 850, so a massive difference, 650 odd thousand pounds in difference. And ultimately it went to the upper tribunal to try and rectify this so that a value gets agreed and a tax can be paid. Looking at it, the way they ended up valuing it was they went for the higher value of that 850, then discounted down, because in this particular case, there were some issues when it came to access and whether planning permission would actually be granted. So they took all this into account, and the end value of that site in this scenario was £590,000, which is a massive difference to that initial valuation of 191. So basically make sure that you're taking this into account where you are looking at inheritance tax planning. Is there any development value? Because the chances are, if there are, HMRC go look to get their slice of this and go for the higher market value. It's a very complicated area, so you need specialists involved when it comes to valuing land and making sure that you get a valuation which you can ultimately defend if it goes to tribunal. Make sure you hit that like button if you find this video useful and you want to see more. Otherwise, have a great day, guys.